Welcome to the VectorVest special presentation, this week titled Trading Higher Highs and Lower Lows. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your host for this evening's presentation. Previously, we've learned that VectorVest loves to buy rising stocks in rising markets, particularly those that are hitting new 52-week highs and even repeated new 52-week highs. Why? Because these stocks are doing exactly what we want them to do and face no significant price resistance. No unhappy investors ready to sell off once they've recovered their prior losses. We also love to see these extended upward price trends driven by rising earnings performance. Of course, the same is true of downtrending markets hitting new lows repeatedly. Our HighLow Operator allows you to search for stocks hitting new highs or lows in price over any period of days or weeks. HighLow can be run separately or in combination with other searches. It can be run on stocks, industries, sectors, or watch lists individually or in combination. Our HighLow searches help us identify these stock behaviors. I think most of us grasp the power of trading these ruler stocks. And to be sure, it is an effective methodology we've supported for almost 30 years. But we all know that even ruler stocks don't go straight up. And when the broad market pulls back, many of our top VSD stocks respond in kind. So let's explore tonight some creative uses of the HighLow tool to help find stocks, industries, and sectors that are responding to changes in the market trend, rising or falling in the short term. A little more aggressive approach to enter closer to the price pivot. One of the biggest trading myths promulgated by the industry is that to buy low you have to buy falling stocks. As a coach, I can't tell you how many times I've been asked what to do with a stock like this. Well, the best time to have determined your exit point is when you entered the trade. Kind of like looking at the exit doors on the airplane when you sit down instead of waiting for an emergency. Our HighLow search can help us more clearly define short-term price action and therefore improve our entries. So entering new trends, re-entering established trends, and continuing in an established trend. So don't forget, the most important consideration is market direction. Let's begin our study at a major change in market direction, our last market low. Consider this market low on September 29, 2015. 96% of the stocks in the database were either falling or moving sideways by virtue of the buy, sell, hold data points. Looking for 52-week highs after 4+ months of this downtrended market might be a fairly limited proposition. It also doesn't take full advantage of the explosive nature of the bottom fishing approach and opportunity being identified by our market timing system. Once the trend has been established, we saw the change in our primary wave on October 2, 2015. Our Unisearch tool will help us find stocks likely to blast off with the market. Our HighLow tool will define specific price behavior that will help us improve our entry and our initial stop loss. As we move off the pivot, we can extend the time frame of our HighLow tool to reflect the new interval. For this example, let's move to the Unisearch and go bottom fishing on this date, October 2nd. From our home page, we'll go to the Unisearch tool, and we'll change our search date to October 2nd, which was that primary wave change. Let's now go to our search directory and go down to our searches bottom fishing group. And we'll check probably our most popular bottom fishing search, jailbreak no contra ETFs. This search, as you may know, looks for stocks that are on the major exchanges that are Derby ready, and the power is this sort: VST divided by RT, high VST, low relative timing. Good stocks that have been beaten down on price. So if we run the search, we see that these stocks, while they have some relatively good RV scores, their RT scores are severely depressed. They're all sell rated. So when I graph these guys, let's zoom in on a time frame here from 10.2 up to the market peak of 11.4. And we'll remove moving average and the RT. And let's put our cursor on our search date of 10.2. And it'll give us just a little bit more room just so we can see the lead up into it. So as we look at these graphs, if we define an uptrend as a series of higher highs and higher lows, Hitting a new low would be how I would define a breakdown of that uptrend. A little bit hard to determine on some of these stocks that we found with the jailbreak search, although many of them did continue to rise nevertheless. As I scroll through, it can sometimes be hard to know. So coming back to our jailbreak search as written, let's add our HighLow operator. To do that, we'll click in the empty parameter box. And as Kathy showed us last week, we'll go to Stocks, Price Volume, Price Split Adjusted, Operator New High. And looking at our daily close, we'll go to the shortest period, 5 days. So the idea here is, like our primary wave, that the market price is higher than it was 5 days ago. The stock's price is going to be higher than it was 5 days ago. Let's rerun our search, and let's graph our stocks again. Our HighLow requirement is requiring that the close of the bar on 10-2 be higher than the bars of the past 5 days, as it is. And so the price action has made the turn with the market. And the critical point is that in doing that turn, we established a pivot low. So in terms of improving our entries, yes, I want to see price advance the next day before I take on the position. But also, by definition, should the price fall below the previous swing low, I'm no longer in uptrend. This gives me a much tighter methodology to manage my initial risk. My initial risk is my entry price to my stop loss at the low, relative to doing something like a trailing 5 or 10% stop. As my price advances and I build profitability into the trade, then I can start extending and trailing perhaps my stop loss as price advances. We can see in this particular example that price advanced many times the size of my initial risk. And of course, my job as the driver of this bus is to hold on to that gain and not give it all back. But for the balance of this presentation, I want to focus on these entries and how I can much better define my maximum risk and how I can avoid buying those stocks that are in a downtrend that bounce but then reverse on me. So as we scroll through these graphs, notice that pretty universally I'm coming off of that swing low that gives me a maximum risk level that I can place. Right? I'm looking for follow through. Moving ahead. Interesting here was the market pivot. We might have set our pivot right at the bottom of that candle, basically right about the same as the low of the signal days candle before it moved up. As we pulled back, maybe trailing our stop up or using a trend line break, some other kind of step methodology. Of course, never giving back more than half of the gain. Again, a nice entry with a pivot low as my initial stop loss. I might have trailed on price action and stopped out when I crossed below this low. Of course, not every trade works out. Not every trade is profitable. I don't need them to be. I just need the majority of them to work out in my favor. In fact, this trade may have gone against me as price pulled back below my entry price, but not below my initial stop price. So I may have closed out here on later price action. And that's okay. I'm keeping my risk in control and minimizing that risk, lining me up for the potential of the gain of my combined market timing, my trend analysis, and my Unisearch stock selection. And one more. Again, I've got the pivot low to set my initial stop loss. Nice gain many times my initial risk. Gives me that nice risk to reward ratio. So once we've established the idea of the swing low, establishing our initial stop loss, we can apply it to any stock that's resuming its uptrend after a pullback. Let's close this graph. And let's go back to our market timing graph. And let's change from our primary wave indicator to the DEW signal. A little bit more prudent signal. It came a couple days later on October 7th. And for this demonstration, let's go to our Unisearch tool and let's take a look at one of our favorite turnaround searches called Turnaround Candidates in the Searches Prudent group. Turnaround Candidates looks for stocks that have solid RS and RV values, but RT values below 1. In other words, stocks that have strong fundamentals that have been beaten down on price, although not necessarily down to those fractional values we saw in our jailbreak search. They're Derby ready, and we're going to sort them VST descending. Let's change our date now to the DEW date of the 7th. And let's run our search. Here we see much more robust RV and RS scores, RT values below 1, but nowhere near the single hundredths of a point that we saw in the jailbreak search. Also, you might notice or recognize some of the names that are actually coming up in this list. So let's take a look at their graphs. Again, we'll zoom into our analysis time frame here of October 7 through the top of the market on November 4. And while it's a great search, we can see that a lot of these stocks hadn't yet made the turn. All right, so let's go back to our search and add our high-low indicator. And we'll rerun the search. Different list of stocks now, they still have those solid values. Interesting to note that most of the RT scores are closer to 1. If we take a look at their graphs, we'll find 10.7. The addition of our 5-day high has defined that the price is higher than it was 5 days ago, giving us that swing low as our initial stop loss. Of course, this stock in particular didn't happen to advance, had no follow through, so we may not have taken the position here because of no follow through. But nonetheless, we've defined that trend up into our signal date. Here again, price advancing, giving us a much better entry. Price advancing off the pivot, giving us a much better entry. WAB turned on us, of course, and that's what our stop loss is for. But we're doing a much better job of identifying stocks that are coming up off of their pivot lows. And now for our final example, let's use our same trading date, but let's use the mighty Midas Touch on that same date. So we're going to scroll up to the cherry picking group. And let's choose Midas Touch VST descending. Now we know that all of the Midas Touch stocks, by definition, have their moving averages of stop price and relative timing all at their 3-month highs. So these are momentum stocks that are already in uptrends by that definition. But we still cherry pick the stocks if I run the search. Let's graph them and set up our Midas Touch graphing layout. And we'll go to our 3-month window, and let's put the hard right edge on our search date of October 7th. So here's the graph setup, and as we have in our Midas Touch requirements, the moving averages are both at 3-month highs, as is the 40-day moving average of RT, and it's above 1. But we still cherry pick because we're looking at the price action to make sure that the price is still advancing and that it hasn't gapped up. So as we look at these graph patterns, some of the stock price, as is the case here on CENT, the price is actually off of its previous high, although the moving averages are still in alignment. As we've seen in our previous examples, we have an opportunity now to define this price action to make sure that we're getting price action that's at a new high. So let's close our graph and let's add to our operator a new high function. But now, instead of just looking for the high to be the highest level in the past 5 days, which could still be lower than the price 2 weeks ago, let's extend the range of our period to match that of the Midas Touch search. So let's look for a daily close over the past 13 weeks. And we'll run the search. And let's take a look at our graphs. And so here in the graph we see that our current close is higher than any prior close over the past 3 months, which we'll see consistently throughout the graphs. Before we wrap up tonight, I wanted to share one more resource with you. If you go to our training tab, we have a discussion of risk management and how we set up the trades for proper risk management in our second lesson, lesson 2, if you want to watch that video for more information. But to wrap up our presentation for tonight, whether you want to trade ruler stocks or something with a little more zest, go with the flow, trade with the market, and know your exits before you enter the trade. VectorVest has all the tools you need. Have a great night.